Obviously seeing quite a different muni market reaction to, say, the equity market or, I mean, even really the bond market. Talk to us about today's muni market reaction.
Yes, so munis are rallying today. At the 12 o'clock snap, yields were down as much as 10 basis points, which is not insignificant in the muni bond market, which tends to lag other major market moves. So today it's really a haven play. Investors are getting out of riskier assets. Munis are a safety asset class. They tend to follow moves in the treasury market, and that's what we're seeing play out after the tariff news from yesterday.
Is it across the board in munis, or are you seeing maybe the avoidance of certain states that may be not so tariff friendly, or vice versa?
We're really seeing this across the board today, so I think we'll start to see a little bit of differentiation as the market tries to understand what this means and it plays out. But really, the AAA curve, which looks at top-rated bonds across the market, yields are down in every maturity. All the way out to 30 years, and that's really contributing to some positive performance, which is a nice change for muni bond investors. The market was down in March, about 1.7%, and it underperformed treasuries. So seeing a little bit of this positive support performance, a little bit of this positive return in the asset class is definitely a nice boost for some investors.
Is there beginning to be any kind of concern at all about credit risk and the fact that, down the pike, maybe not immediately, but down the pike, and therefore investors might need a little more premium?
Yes, that's definitely a concern. Munis tend to perform better in recessionary environments than other asset classes because they're very high quality. So you think of states, like the state of California sold $2.5 billion worth of bonds yesterday. And that's the fifth largest economy in the world. It has a lot of protection to it. And those are the types of issuers in the muni market. Of course, there's some differentiation. We're seeing some pressures, and we will see some pressures if we slip into a recession. So high yield will probably be hit harder. You'll see some credit pressures in higher education and hospitals, but really the asset class is quite high quality, and we're seeing that play out.